Okay, so finally we have the better indicators available for TradingView. Thank you to everybody who's been requesting these. Thank you for your patience. It has taken a long time. We first waited for TradingView to make tick charts available, and then we had to learn a new scripting language, PineScript, in order to translate the better indicators for the TradingView platform. But it's done now. So just want to give you a quick intro in this video and then a whole bunch of charts so you can see what the better indicators look like on TradingView. For me, it's been an interesting learning process. I now appreciate why people like TradingView so much. I do get it. A couple of the things I've noticed in my first impressions, this is only working with TradingView for the last month or so. I've only been able to scratch the surface of the true functionality of the platform. So over time, I'm sure this list will change, but being web-based is an absolute game changer. The range of symbols is unbelievable and the data available is awesome. The interface, I think, is really elegant. The need for being able to do everything with paring it down so it's simple to understand. Tricky to do. I think they've done a good job there. And the speed of loading charts and recalculating indicators and so on, pretty impressive. Also, PineScript is a coding language in chart editing, which I really liked working with, and then the ease of sharing open code or ideas on the platform is pretty cool. And just in case you don't know, TradingView now boasts 100 million users on a regular basis. Somewhere between 2 to 10 million of those are paid. And that compares with NinjaTrader, which supports about 2 million traders. About 100,000 of those are paid. And then TradeStation, 200,000 users, about 150,000 of them are paid. So it's a massive platform and it shouldn't be ignored. And one minor detail that I don't think people are aware of, it's actually been developed by the folks who built multi-charts. And back in the day, Dennis Glober was a really strong influence through a thing called Own Data, which was increasing the capability of TradeStation. So based on what he learned there, he put into making multi-charts, which was a better version effectively of TradeStation. And now they've taken all of those learnings and putting into TradingView. So hats off to the team there. And I'm just super late to the party. But anyway, so my praise of TradingView is not without some caveats. And there's a couple of things I need to warn you about. The first one, tick data that we've waited so long for is not even close to other platforms. There's a discrepancy of somewhere between 1.8 and 2.4 times for crude oil to E-mini. And that means that not all of the ticks, roughly half the ticks, are being reported on TradingView. Somehow they're being compressed. It's probably because of data needs and so on. But it is not a true tick for tick comparison with TradeStation data feeds or other high quality data feeds. Just as an example, this is data from Friday on the E-mini. At the end of the trading day, midnight to the end of the day on Friday, TradeStation recorded 806,000 ticks trading on the E-mini, and the equivalent number in TradingView was 337,000. So it's roughly half the number. The total volume traded was roughly the same. Volume data never matches exactly between what the CME reports and what the different data providers show you, but within a couple of percentage points is pretty good. But that's a huge discrepancy between the two, and so I don't know what's going on with TradingView and their data. Most likely the data is being compressed for storage purposes, transmission purposes, and so on, but they really should tell us what's going on. The Tip Bar Charts article on Emini-Watch has assembled over the years the different games the different data providers play, cleansing data, compressing data, and so on, as to why there's a difference in ticks between different data providers. But this is such a huge anomaly. I think there should be something public that they're saying about why this is the case. So going back to caveats, that's the first one, that tick data is not the same between platforms. And with TradingView, you only have options of 1, 10, 100, and 1,000 tick, whereas the other platforms you can select 233 or 500 or 1,000 tick charts. With TradingView, there'll only be those four options, which isn't too bad. I mean, I found 1,000 tick charts useful for the E-mini, and all the other futures markets, the 100 tick charts, were pretty good, so that's good. The other thing that's not available on TradingView, so volume traded is not split between volume traded on upticks and downticks. So that's part of modern trading themes, but for whatever reasons, that's not available within TradingView. Again, probably because of data storage and transmission and so on. So for the better indicators, what we've used is a proxy based on volume and open, high, low, close. That proxy calculation has always been available in the better indicators because in the early days, some of the stock trading data, in particular, the numbers split between upticks and downticks was wacky and out. And so we needed to be able to default to a way of proxying that uptick and downtick data. And we've always done that with volume and open, high, low, close. So it's in there as a proxy, but it's not the comparison between upticks and downticks. The net of this is that you will find that the charts between TradingView and, let's say, TradeStation, platform I use the most, will not match. But they're still directionally useful. I particularly found the 15-minute charts or the minute-based charts, the hourly-based charts that I was working with, pretty good, very useful. Tick bar charts, less so, but maybe I'm just going to have to get used to looking at the tick bar charts over the next months or so. The algorithms that we use in the better indicators are identical between each of the trading platforms. So therefore, the only difference that you see on NinjaTrader versus TradeStation versus Multicharts or TradingView is the data that the indicators are being fed with. It's one of those things. I wish trading at this level were an exact science and data were data, but that's not the case, and you have to finesse these things. What we're looking for is the next level of data down. Can you predict price with price? I don't think so. Yes, there'll always be momentum in price, but you have to get to the second order understanding what is going on behind the price, and that's where the average trade size and the volume traded at the bid and the ask is absolutely critical to get to that next level. So there are some thoughts on TradingView and the better indicators. We would love to have you as subscribers to the better indicators on TradingView. To do that, you'll have to go through an application called WHOP, W-H-O-P. And we've got a sales page and a subscription page on that site, whop.com/discover/Emini-Watch, and that'll take you to the sign up page, and then you'll have to connect your WHOP account with TradingView, and that's just a question of adding your TradingView username to your WHOP account, and then once that is done, you'll have access to the indicators. All the major indicator providers on TradingView use this application. It's basically the only game in town, and the alternative is to add manual usernames to the indicators, and that's not practical going forward. So this is where you'll be able to get access for TradingView. I'm sure there's going to be bumps along the way, I'm afraid, in the early days and weeks getting this all going. Bear with us. We'll do our best to help everybody, and if you want to try the indicators, please go ahead and follow those links. I'll also add those links to the description of this video. And lastly, some charts. I'm going to attach a fairly long video that I did talking through the better indicators on TradingView and giving you a much better sense of what they look like on the TradingView platform. I'm not suggesting you watch all of that video, but if you watch some of that footage, you'll definitely get a sense of what the better indicators look like on the TradingView platform. Again, thank you for everybody's patience, and let's see how this goes. Better indicators for TradingView. It's a new day. Okay, just recording a quick video of the better indicators on TradingView. Recording this video Thursday, 25th of September 2025. Markets opened. It's 8:55 a.m. Chicago time. It's a pretty busy day on the E-mini, so there's a lot to look at. First of all, just going to show you that I've got my watch list set up here on the right hand side, and I'm going to go through some 15-minute charts to show you the indicators on a whole bunch of markets. And we've got the E-mini, the Nasdaq, we've got Euro, we've got British Pound, Aussie Dollar, Japanese Yen, 10-year notes, 30-year bonds, gold, silver, Bitcoin, Ethereum, crude, natural gas, copper, zinc, soybeans, and wheat. So that's on my watch list on the right hand side, and I've got two charts here side by side. This is the more traditional view, not the one chart view of the better indicators. On the right hand side here, what we've got is we've got beta sine wave and beta sine wave 2. So as you recall, beta sine wave is an improved version of the Ehlers indicator that measures support and resistance in 3 different time frames, dynamically printing support and resistance on the price bars. Breaks of support and resistance give us trending moves. The cyclical calculations are happening below the price bars down here. I'm going to resize this chart in a second so that you can see this more clearly. But beneath the price bars, we've got the cycle indications happening in the 3 different time frames: low, intermediate, and highest time frame. The low time frame has the thin lines and then slightly thicker lines, and then the thickest lines are the highest time frame. And then on the price bars themselves, we print these support and resistance levels. I like red and black or red and white for support and resistance, and so we've got on a black background, we've got some grey price bars and then support and resistance lines going on there. In terms of settings for these, they're all fairly easy to understand. We've got a range of inputs, the support and resistance colors and the up and down arrow colors, sizes of those, the shading percentage of the background, plotting for each of the components of beta sine wave, which is support and resistance, the paint bars, which is the trending algorithm for the up and down trends, background for overbought and oversold. Big things happen at triples, and then the arrows giving us signals on beta sine wave, and then we've got alerts that we can switch on of all of those. So that's always straightforward. So the configuration for the indicator mostly happens on the input panel. We've got duplication in the style panel. That's just the way the beta sine wave code is written in PineScript. And then beta sine wave 2, same type thing. We've got some settings to look at there. Slow and fast lines, different colorings and width of the lines. In terms of the inputs, nothing much on the inputs there. So very straightforward on beta sine wave. So that's the right hand panel. Left hand panel is everything to do with volume, beta momentum and beta pro am. So if we look at that, beta momentum is a very simple indicator. It's a volume-based momentum using the upticks and downticks data coming from the exchanges. Unfortunately, with TradingView, we don't have upticks and downticks data. So what we're using is a proxy for that using the volume of the bar and then the open, high, low, close numbers. We've always had that as an input switch on beta momentum in TradeStation and NinjaTrader. It's a way of defaulting back to a raw calculation. We're lucky with the TradeStation data feed and the NinjaTrader data feeds that we get that raw data, what volume is happening on an uptick or a downtick. But back testing, we can get very close to that reading with the open, high, low, close numbers and the volume numbers, but it's not a true reading of up and down volumes. But that's just compromise that we've had to make because the data isn't available. So that's beta momentum. Let's look at the settings on beta momentum. Inputs, we've got our alerts, exhaustion, divergence and flush signals happening there. In terms of the styling, we've got exhaustion, bull and bear signals, flush, bull and bear signals, and divergence, bull and bear signals there. Very straightforward on beta momentum. Those are the dots that are printed on the price bars themselves. Beneath the price bars, we can actually see the reads on beta momentum. So let's go to the settings of that. And here we go in terms of inputs. There's nothing there, but the styling of these, we've got the momentum line, the exhaustion signals, flush patterns, bullish and bear, divergence patterns, bullish and bear. Now, it's a little bit complicated here. We've got 1, 2, 3, 4, 5, 6 of each of these. So it's a little bit of a fudge here. We're having to work around the constraints of PineScript for back plotting these signals on the momentum bars themselves. So that's why there's a number of inputs there. A little bit messy. Sorry about that. So that's beta momentum on the price bars, and then we've got beta pro am, which now has all of our signals included. So let's go to the inputs here on beta pro am. Beta pro am is probably the most important indicator. It's using the average trade size to calculate professional and amateur activity. And if there's one indicator that I need on all my charts, it's beta pro am. It shows me what the professionals are doing and where they're active. And so the indicator has a lot of inbuilt components. We've got the professional bars and big professional bars. So when the background is in blue and the bars are blue, that's particularly high average trade size and super importance. We also have professional boxes being printed. That's when professional activity like this happens at new highs and new lows, and that's important for showing where the professionals are taking profits. We got the amateur bars and Rambo patterns. Amateur bars usually printed yellow on my charts, and the Rambo patterns, which are the reversal of amateur breakouts. So that's when we see amateur activity at extremes. It's the inverse, if you like, of the professional boxes. So professional activity happening at extremes, amateur activity happening at extremes. If we have the better sine wave indicators coming really close together and price is close to those, we have a squeeze box that's shown in green here, SQ for squeeze, and then we've got the professional trend, which is the trailing stop that we use to show uptrends and downtrends using professional activity. The background is either in red or grey for uptrends and downtrends, and that's called a combo plot because that's the combination of better sine wave and better pro-am. When we have price and volume moving in sync, they show us strong trends, and that's what the combo background is plotting. Arrows are breaks of the professional trend line. When we get confirmation, sometimes you just get a little false break and it goes back straight away the other way. The arrows show us when we get an initial break, a little bit of a retrace, and then a re-break of that point, and so that gives us confirmation in terms of trend direction changes. And then the signal line is if we have a combination of professionals and these break arrows. If those two things happen together, that's important. So better pro-am, a little bit complicated there. Again, we've also got elements in the style settings. Those are brought in directly from the Pine script there. So there we go. That's a quick run through of the settings of the 5 better indicators. So there's 2 versions of better sine wave, and better sine wave 2. We've got better momentum 2, and we've got better pro-am. So there's 5 indicators there. Now I've just resized the chart here so that we can go through a bunch of the 15-minute charts just to show the signals that we're going to get. I'm going to talk about the E-mini and the NASDAQ later. Now I've got these 2 charts are linked up so that when I make a change in one, it links through to the other chart, and we're going to start looking with the euro for a 15-minute chart of the euro here. So the euro at the moment is in a downtrend. You can see the background in better pro-am is grey. We got some professional activity, came in here to buy the low at that point but didn't go anywhere. We ended up with amateur bars under the lip there, under the trailing stop. We lurched down to another level here, and here we see professionals again active on an extreme with an extreme momentum read. A market runs from exhaustion buy to exhaustion sell. So that's the euro happening at the moment. You could also see that we had resistance at this point here with squeezes happening right where we had a resistance on the highest time frame coming in. So the market couldn't get through that cyclical turning point. It was weak. We hadn't seen enough blue professional bars or professional activity at these lows to capture the market and force it and go the other way. So it bounced off that resistance, continued into a downtrend. That's a big thing that happened at triple signal there with the grey solid line, and then the background's grey as well, showing that we're going into a downtrend and the market continues down. Better sine wave has printed all of these bars grey on the way down, showing that strong downtrend. So let's look at 15-minute on the British pound. You can get a sense of how quickly the indicators recalculate when you go from chart to chart. So better pro-am taking a little bit of time to calculate. There we go. Just because it's a complicated indicator and we're looking at a lot of back history, calculating average trade size and so on. So again, we're in a downtrend. We had a false breakout here. There wasn't enough activity to break us to highs there. We broke through the lows. Again, we were in a downtrend on better sine wave. We'd broken through support. We came up to a pullback in a downtrend. There's our big things happen at triples. Resistance on the highest time frame comes in here just as we got a squeeze signal showing that all of those support and resistance lines and price is really close together. So we get a squeeze, SQ, there over the price bars, and we continue the collapse. The bars are in grey showing us a downtrend. We have a little bit of an exhaustion signal. Professionals step in there, but not enough to break us into an uptrend. And we lurch down again, down here to 33.70s. Exciting day on the markets happening at the moment. And here more blue professional bars coming out the lows with an exhaustion sell pattern down there. So that's British pound. Aussie dollar. My friend, the Aussie dollar down at 65.6. Similar patterns to all of these. There's that resistance comes in on the highest time frame. It's a pullback in a downtrend because we collapsed through support on the highest time frame here. came up to test. We didn't get a squeeze signal there, interestingly, but they're pretty close together. There's the big things happen at triples. We get a down arrow happening there, and we continue into the downtrend here. The background's in grey, showing us that we're in a downtrend. Again, professional activity coming in here on this first lurch down, but not enough to turn us back around through the trailing stop and reverse us into an uptrend. We can continue down, arrow down mark here, not exhaustion sell yet, but that's a big read on better momentum here, and professionals starting to come in with that high average trade size at those lows. So Aussie dollar, Japanese yen, same picture. Here's our exhaustion sell signals, bullish divergence, another exhaustion sell, even lower signal there, and there's our resistance on the highest time frame. Come in here. This is a confirmed signal where we have professional activity above the bars here, and then we broke through. We had confirmation, so we get a down arrow in white and the dotted lines showing us that we have professional activity and a break here of better pro-am. And they're the professionals coming in here, another squeeze, professionals coming in here. That little squeeze you can see is all of those support resistance lines tight together at that point there, and we move out of squeezes into trending moves. But there's a Rambo pattern happening, so new lows being made at that point there, but then the professionals come in on the retrace here and sell it down. So that's Japanese yen. 10 years also heading down, exhaustion sell signals there. And we had confirmed uptrend that ran nowhere. We didn't have a lot of blue professional bars coming in at the lows down here, so I'd look for more of those for a confirmed signal on the downside. But they were coming in on that retrace there at that resistance point on better sine wave here, continue into a downtrend. Couple of squeeze signals right there as everything's coming close together. That fails. Big things happen at triples. It's a triple happening there with the background print, that solid print in red. We have big bounces or big breaks on triples, so we get a break there. The background's in grey, confirmed downtrend, and now the professionals are coming in at these levels here. The bars have turned blue. We've got an exhaustion pattern. We've got pro bars there. None of these charts so far have shown us big pro bars, so the background's not in blue yet. We're saying professional bars, but not big pro bars coming in yet, so maybe we'll see that as these markets develop. Here's the 30-year chart. A little bit of a problem here. That shouldn't be showing as horizontal line. That could be because of the way the prices are marked in bonds. We'll have to have a look at that, the coders and me, to see if we can fix that. We ended up with Rambo patterns at the highs with exhaustion patterns, the blue dots. Bearish divergence comes in. There are the blue dots on better momentum. Bearish divergence. We roll over at cyclical turning point here. Big things happen at triples. Bang, we're into a downtrend. We needed to break the trailing support though. It wasn't high up here. It was low on this move, and it's broken into a downtrend there. So that's 30 years. Gold on the 15-minute chart as well. So we topped out in gold a while ago, 38.39. Up here we had bearish divergence, we had exhaustion buy, bearish divergence and flush patterns, blue professional bars. There's a background in blue. So big pro bars, that's super important. When the bars are blue, when the background's blue, we know this is super high average trade size. It broke into a downtrend. We had a little bit of a retrace here and then a confirmed break here. Professional bars as we head down, exhaustion sell. Some blue professional bars coming in here, but we're in a downtrend. The background's in grey on gold. Silver has had an epic run up to the 45s up here. Again, big pro bars come in here on better pro-am. So the bars are blue, the background's blue. We've had exhaustion buy all the way up here at 45, 46. The professionals are taking profits. We'd had an early signal here, but it hadn't come with a lot of blue professional bars at these peaks here. We're waiting for this. We had exhaustion sell. We bounced off that and we came into exhaustion buy, and now it's failing at that point on silver. Bitcoin having trouble at the moment. It's weaker than gold and silver. The momentum's been with those futures markets, not so much Bitcoin. Not a lot happening here. Some blue professional bars, one or two at this point here with the exhaustion sell. A little bit of a rally, but no big pro bars coming in here. And we're in a downtrend. We'd broken support in the highest time frame here, the solid red line. We'd come back up to resistance in the highest time frame. It was pulled back in a downtrend. We just bounced off that and just continued down. So that was happening at this point here. And then Ethereum also coming off. We'd come up to almost 5,000, 4,008, something like that on Ethereum, but it's weakened and we're heading down to 4,000 at the moment. So at this point here, we're in a downtrend. Background's in grey. One little blue professional bar. We trail the stop down a little bit, but all of this move up is all amateur bars at that point there. Squeeze pattern comes in because we're super tight with support and resistances together. continued down into a downtrend. The bars on better sine wave turn grey, so we're in a downtrend there. The background turns grey, we're in a downtrend on better pro-am. And doing nothing in terms of momentum here. There's no real standout signals there, but we're in a downtrend. Backgrounds in grey on Ethereum. Crude, I should say as I'm going through each of these charts, if you don't like the colors and the setups that I use by default, all of that's changeable. You can change these into white charts instead of black background charts. You can change all of the bar colorings and so on. So if you don't like the look of mine charts, you can just adapt to your own. Now, we had a very nice run in crude this week. It didn't start with blue professional bars right at the lows, but as soon as we started to break above 63s, all of those blue professional bars started to come in here. Exhaustion buy, getting the move going. We've come back up to 65 or so. It's weakened a little bit, but we're in an uptrend. The background's in red. You can see all the red bars happening here on better sine wave. So crude's heading up. Natural gas also starting to head up. Natural gas, super big reads here on better momentum. You can see a flush pattern down there. It plays around the zero line. Not really gone to an exhaustion pattern yet, and it's broken out of this downtrend, background in grey into the background in red. Rambo patterns down here, amateur bars into those lows. Rambo patterns at those highs, they get freaked out a little bit. We come back, a couple of squeeze patterns as we're getting really tight, support and resistances coming together here, and we break into an uptrend. And so we've broken above our trailing stop, and the bars are red on better sine wave as well. So that's natural gas. And copper. Copper, there was some fundamental news. One of the copper mines is having problems, and so although I thought copper was untradeable because of the tariff news that's been whacking it backwards and forwards, I think this confirms my view that it's untradeable because of the fundamental news that came in, and copper just went a little bit berserk over the last day or so. Blue professional bars come in here, backgrounds in blue, the bars are blue, exhaustion buy, getting the move going. Maybe taking profits a little bit. These highs we've come off a little bit. Let's see if that settles down into this retracement zone and then heads back up above 488 or so. But that was blue professional bars coming in on that bad news with the copper mine. Corn is a little bit confused with this line up here. We'll have to have a look at that again. Could be the way that TradingView denominates the prices, as in 1/32 or 1/16 or 1/8 rather than decimal points. That's why this looks a little bit dodgy. And here we go. These dotted lines don't look right on a better pro-am there, and I think that's a result of the way those prices are calculated. So we'll have to have a look at that just to get the better indicators squeaky clean for TradingView. Soybeans were down to 112, and in long soybeans at the moment, so I'm looking for this. I was in on this break, got up to 120, and then it settled down a little bit. I'm probably a little bit early, although on the tip bar charts this looks stronger than it is. Blue professional bars come in. It's not broken on the 15-minute chart into an uptrend yet. We've got a squeeze happening here. We've got resistance that's been due. Well, it's there on the highest time frame. It's a pullback in a downtrend. Big things happen at triples. Let's see if it has another push down or we get rescued and we come back up through 116, 118 on soybeans. But technically at the moment on the 15-minute chart, still in a downtrend. And wheat, similar type problem with wheat with the way it's priced in fractions. But here's a nice signal. So down here at the lows, backgrounds in blue, bars are blue, professional signals come in, exhaustion sell, bullish divergence. It's a nice pullback to end of trend on the intermediate time frame here. We rock it up, we get a signal, we're in an uptrend. A lot of squeezes happening at the moment. The support and resistance lines are super close together. So let's wait and see if wheat's had a nice run from 505 to 523. Let's see if we continue to break higher, but it's all off those blue professional bars coming in at the lows and the exhaustion sell signals. So there we go, rip through the TradingView charts using the better indicators on a 15-minute chart. So let's talk about tip bar charts in TradingView now that they are available. There's a couple of things you should know, that there's only various settings available for tip bar charts. 1 tick, 10 tick, 100 tick, and 1,000 tick. That's a bit restrictive. I think 1,000 tick chart makes sense for E-mini if you're swing trading the E-mini. That's pretty good. 100 tick chart for most of the other markets. And from what I've seen, the tick data in TradingView is very different. from TradeStation, which I consider to be the professional trading platform with the best tick data. And there's a factor of somewhere between 1.8 and 2.4. So with the E-mini, what I've noticed is that there are 2.4 times the number of ticks or trades happening in a trading day compared to TradingView. So that means a 1,000 tick chart in TradingView is equivalent to a 2,400 tick bar chart in the E-mini. For crude, for example, the ratio is about 1.8, so a 1,000 tick bar chart in TradingView of crude is equivalent to a 1,800 tick bar chart in TradeStation. TradingView is probably consolidating the trades so that there are fewer ticks that come through. That could be a data constraint that they just want to make it easier to handle the data on the back end. I definitely think the tick chart's still going to be useful for looking at different markets. The 1,000 tick bar chart in the E-mini makes sense. For all of the other markets, I'd be using a 100 tick bar chart. But there will be differences, significant differences between my charts on TradeStation and TradingView, and that's what I've found. The reason why I showed you the 15-minute charts first was because I think they are actually useful. Jury's out a little bit on TradingView. I'm just going to have to watch it a little bit more closely, look at far more markets during the day to see how they compare with, for example, TradeStation. But anyway, we've got some signals happening at the moment. This, if I would have just one chart set up, would be it. It's better pro-am and better momentum. We've got the exhaustion patterns marked on better momentum here, and then on the price bars themselves, we've got the professional bars from better pro-am with the trending activity, the trailing stop, and so on. You can see we bounced off exhaustion sell here. I took a look at the TradeStation chart, the equivalent here. We were bouncing off amateur bars down here on the TradeStation charts. There weren't blue professional bars coming in here, but it was an exhaustion sell signal down there. So we haven't got the depth of information that we got with a TradeStation chart from this, but that's why the market's bounced at the moment. We've got blue professional bars happening here on the retrace, and there's the pro signal that's coming on that retrace there with blue professional bars coming in there. So that's what the tip bar chart would look like, a 1,000 tip bar chart on the E-mini. Let's just show you a couple of, this is the 100 tip bar chart here. So we raced away, we've got these big professional bars coming in here at this turning point, so on that retracement that might be over for the time being. Here's the bounce that we had. It was off Rambo patterns down here and down here, broke into an uptrend, not enough to turn the market around at this point here, but now that we have more blue bars coming in the 100 tip bar chart as confirmation, that might be a good place to signal short. But let's look at a couple of the other markets in terms of a tip bar chart. This is Euro tip bar chart, 100 ticks happening here, exhaustion sells, professionals coming in, bullish divergence, flush patterns, bit of a squeeze, hasn't turned into a proper uptrend yet. We had some background blue, high average trade size there. I'll be waiting for more of those for a turn on the Euro. British pound, same thing, exhaustion buy, bearish divergence on that retrace, big pro bars coming in here. We fall into a downtrend. Some blue professional bars come in here, but not big pro bars with a background in blue yet. You can see they weren't active here, they were active on the retrace. They were coming in as we were rolling over, and then we get our signal short. Aussie dollar, similar thing, exhaustion sells down here, blue professional bars. Again, they were gaming, the professionals were gaming it up. They weren't buying it here or here. They were getting short at this point here, then gaming it up until we had amateurs being wrong-footed here, whole family of Rambo patterns and a flush signal, flushing out the last of the buyers at that point. We roll over, Rambo patterns, more of them here on that retrace, and we head down. Japanese yen, again, downtrend happening here. Big pro bars starting to come in here. We keep on going down. We haven't substantially broken the trailing stop yet. More exhaustion sell happening at that point there. 10 years, let's see what happened on 10 years. Still down, and we haven't got that problem with the different signals, the horizontal signals coming in on 10 years, which is good. Let's look at gold. Gold coming in here. Yeah, so there we topped out. Backgrounds in blue. Let me just move that across there. Backgrounds in blue. Professionals at the highs. Exhaustion buy, bearish divergence flush. We roll over. Signal short. We got some signals long at these points here, but there wasn't enough blue professional bars to come in at the lows to catch that at that point. Silver. What's happening on silver then? similar type thing. Oh, there's a nice bottom being caught. Big pro bars, exhaustion sell, bullish divergence, squeeze patterns, squeezing a tight break out of that into a trending move. So that was nice from 44 to 45. And over that time period, what was that on the 25th? So that was today, early in the day. And Bitcoin on tip bar charts, yeah, there we go. We rolled over at 119. So I just don't think there's enough data in here. This is a 100 tip bar chart, and that's a full day of trading on Bitcoin on CME futures. I just don't think that's right. There's far more activity that goes through the Bitcoin futures than that. Ethereum, a little bit better in terms of volumes going on there, but trying to make a bottom at 4,200. Big pro bars coming in here. Let's look at crude lastly. So yeah, so crude maxed out on that move at 65, rolled into a downtrend, and again that's happening from yesterday's close to today's trade, down from 65 to 64. Blue professional bars on the retrace, none taking profits or getting in long here. They're weighted to this signal down here to start getting long, but again, big pro bars, the background's in blue. So there we go, even more charts, tip bar charts from TradingView. Definitely useful, but you'll have to be able to live with differences between the TradingView charts and, for example, IntraTrader or TradeStation. So there we go.